Hello, welcome back to this week's analysis. I hope you had a profitable week. So this week we are going to be kicking things off with DXY. Now last week on DXY was bearish. As you can see, this is the weekly time frame. So each of these candlesticks represents 1 week of price action. So you can see that we were more bearish last week on DXY. And if you notice, for the past couple of weeks since December the 26th, from this bottom here to the top, this is the first time we are seeing a bearish candle with a large body. So for this week, we are going to be thinking in probability as always. So we are going to look for buy scenarios and we are going to be looking at sell scenarios. Now on the daily time frame, price is clearly in an uptrend. If you look from the bottom right here to the top right here, right, price is creating consistent higher highs and higher lows, which is the characteristics of a bullish trending market. Now let me pull up my marker and do this: high, higher low, higher high, higher low, higher high, higher low, higher high. Then what did you notice? Looks like price has created a new lower low here, which is lower than this zone, right? But we don't want to ignore the fact that price is in a bullish trend. So we are going to be looking at a bullish scenario and a bearish scenario. Now let's go to the 4-hour time frame so that we can see things clearly. So this is where my decision is going to play out, whether bullish or bearish. However, based on my strategy, I don't care what the trend does, all right? My execution can make me enter in any market. I could buy in a bearish market and price will still hit my take profit before going the other way. So it doesn't matter. The purpose of this analysis is just to tell you my directional bias. All right, like I said, execution is one thing, analysis is totally another. You can know how to analyze and still struggle with execution. All right, so if you need help with that, enroll with Let's Trade Academy so that you learn my execution model. But well, let's continue with the analysis. Now price is currently trapped within these two green zones. Now remember, on the daily time frame, it looks like price has created, let's go back to the daily time frame, has created a new low around here, all right, which is obviously lower than this point, but the overall trend is still bullish. All right, so we don't want to ignore that fact. Now on the 4-hour time frame is where we're going to think in probabilities. Back to the 4-hour time frame. So what we would like to see here is if price breaks below this lower green zone, right? If price breaks below that lower green zone, then we will see a bearish trend, at least until we come to these lows around 103.094. all right, the first price has to take out this zone that has been tested multiple times looking left. Then for us to continue bullish, I'd like to see price take out this zone here, which is around 104.115. I'd like to see price take out that area, that price area, so that we can continue bullish. All right, so this is my bullish and bearish scenario. Extended sell if we take out the 103 area, which is 103.656. So if we can take out that area, then we'll see an extended bearish into 103.132. But for a bullish scenario, we have to take out 104.092 so that we can see price continue higher. So that is my view on DXY. Now let's jump to Euro USD. Euro USD is also trapped in a range right now around the zone. Remember last week, price was, I had a trend line here last week. I had a trend line like this, right? And I was like, cool, if price takes out this trend line, then I would like to see a retest of that trend line and this green zone before we make our way up to this gray zone. Of course, price made its way all the way to this supply area before giving that massive rejection. But the point here is price respected this gray zone, right? You can see price came back and closed below that zone, and now price is bouncing within that zone. So for next week, just like I did with DXY, for price to continue the extended move downward, then price has to do this, break below this green zone, which is around 1.07910. all right, then if price breaks and closes below that green zone, I would like to see a retest, then we'll continue all the way to the downside. But for price to continue higher, then we have to break above this gray zone. Now, this gray zone is a daily region, right? I'll go back to the daily time frame in a bit to show you why that gray zone is a strong resistance level. So for price to continue bullish, it has to conquer that gray zone, right? And that gray zone is around 1.08519. So price has to break and close above it, come back for a retest before we continue at least into this area here, which is 1.09267. all right, so this is my bullish bias, this is my bearish bias. You need to think in probability so that you don't miss out on any move. You don't want to be stuck to the bullish idea and then miss out on the bearish idea. All right, so you need to have plan A and plan B. I mean, that is how you optimize profitability in the market. Now, I said I was going to show you why that gray zone is a strong resistance level. If you look left, look at this significant rejection from that zone. I mean, this gray zone is responsible for pushing price higher, right? And after that price has reacted, yeah, there were periods where price violated that zone. But if you look at that gray zone, for the most part, price has respected that gray zone historically. So you don't want to overlook it. And this is actually happening on the daily time frame. You can see that was the reason why, of course, this demand zone played a part for this candlestick rejection here. But let's still not forget the fact that price also respected that gray zone, right? Came back close below that gray zone. So price may just continue lower next week or higher, of course, if we can break above the gray zone and continue pushing higher. Now, that gray zone area is between 1.08520 and 1.08345. So you can rewind a bit so that you can plot these zones on your charts. Now, back to the 4-hour time frame. This is my bullish and bearish scenario. Price has to conquer that gray zone, retest it, then we want to catch a trade from that gray zone all the way to the top here, which is around 1.09216. And for price to continue an extended move down, then we have to take out the 1.07902 area of this green zone, break below it, come back for a retest, and it is from that green zone we want to catch an extended sell to this next level here, which is 1.06958. Now let's go to the next on my chart. The next on my chart is Usdjpy. Usdjpy last week we're trading around here, right? We're trading around here, and I called your attention to the fact that price will most likely make another touch to this green zone here, right? The idea is price will most likely create a double bottom formation before we continue higher. So of course you could catch a trade at this circled region here, something like this, a double bottom before we rally to the upside. So welcome back, guys. As you can see, price came close into that zone and continued higher. All right, my final target on Usdjpy remains 151.409. all right, so yes, we could still play around here before we make it to that final target. But the whole idea, which I called out in last week's analysis, was price was going to retest this zone before we continue higher. All right, so Usdjpy going into next week, I am bullish. Now on AUD/USD last week, price was trading around here. Am I correct? Yeah, around this trend line. And I gave two scenarios. I was like, price could easily bounce away from that trend line and continue downward. So I was like, if I see a solid rejection based on my entry model, if I was actually trading AUD/USD, because I don't trade it, right? But if I was actually trading it, I'd like to see a solid rejection from that trend line for me to now sell. Well, as you can, based on my entry model, I can't find a reason to sell around here. So I gave a second scenario whereby I said if price breaks out of it, I'm not going to enter immediately after the breakout. I would wait for a retest and like to catch an entry from that retest. So as you can see, price came back for that retest, and my target is at the top here. right? If you doubt me, check it out for yourself. But if Monday kicks in and price fails to continue pushing lower, right, I'd like to see price close above this green zone, right, which will obviously be above the trend line here. So once that happens, I'll wait for a pullback. Once that pullback happens, I'll go to a much lower time frame. I'll look for buying opportunities, right, a bullish engulfing candle or whatever. I'll look for buying opportunity until we come into this area. Welcome back, guys. So you can see price played out based on our plan B. So that is why it is always important to have plan A and plan B. Let's even say based on your entry strategy, you decided to sell following your plan A because I was more bearish than bullish, right? So let's say you even sold, then you lost out of the trade. Remember, when price came back for the second retry, you would have made back your loss and even a profit. So that's the whole idea of trading. You need to accept the losses, all right? But always have plan A and plan B. That is how to stay profitable long term, because you can't just stick to one plan, like whether plan A or plan B. You know why? Because you are not the only market participant. Where you want to buy may be different from where the other big boys that actually does move the market wants to buy. So do you think your stop loss will never get hit? I mean, if we are all correct about the market, if we are all buying, then the market will never move, right? The whole reason why the market moves is when you are selling, you have willing buyers. When you're buying, you have willing sellers. That's the whole idea of the market. All right. So if we are all buying and putting us at a particular level and putting our stop loss at a particular level, we are the willing sellers. High is our orders are even never going to get filled. So bear that in mind. That is why I laugh at traders that always worry about their stop losses. Right? You are not the only market participant, and that is why from time to time you must hit stop losses. Accept that. Stop fighting it. All right, just be more profitable than your losers. All right, that's the whole idea. At the end of the month, you want to be able to smile to the bank. All right, but how do you even do that? Of course, first of all, you need to have a profitable strategy to even be willing to accept losses. All right, you don't want to be hitting losses and be saying it's part of the game. No, if you have more losses than winners, that's not a good strategy. By more losses now, I mean if you are not profitable. But as long as you are profitable, you are fine, you are okay. All right. So once again, if you want to learn how to do all of these things, just visit letstrade10x.com, get any of our mentorship programs, and take your trading to the next level. So AUD USD next week. Now, what will I be looking for? I'm still going to be thinking in probabilities. Now you can see price is quite choppy at this region. So I'll have a buy and sell scenario. So for me to sell, well, I like to see price break below here, retest here before we continue lower. All right, remember my overall target for now is around this gray line here, which is 0.63502. That's my bearish target. All right, so I'd like to see price take out this green region, 0.65311, right? Come back there for a retest before we go lower. Then for price to continue higher, we have to take out this gray area here. That's my plan B, right? Take it out, close above it, then come back for a retest before we continue into my next target, which will be 0.66657. 0.66657. Why? Because that's the obvious zone that has been tested multiple times. If you look left, right, it has used it as an area of resistance previously, as and as an area of support previously. So that will be the next target where I'll be expecting price to react to. All right. Plan A is bearish. Plan B is bullish. All right. So that is my view on AUD USD. Now the next on my list is gold. The same thing applies on gold. My plan A for last week on gold was a bearish gold, right? But I also gave a plan B. I always give plan A and plan B so that you don't leave yourself hanging, so that even if you take an initial loss, you recoup it in the follow-up trade, right? So what happened? My initial bias was that price was going to continue lower into the 1980 areas, but I gave a plan B. The plan B was for price to break above this green zone, come back and give that green zone a retest and continue higher into the 2039 area. If you doubt me, check it out for yourself. But if this impulsive move continues to the upside, then I'd like to see price close back above the 2016, 2015 area, then come back for a retest. Then I'll buy into this zone, which is 2039 area. Welcome back, guys. You can see price actually went with plan B, came back for a retest, bounced off that zone and bought into the 2039 area. Perfect, right? Plan A, plan B. Now the last on my list is GBP USD. GBP USD, I'm going to be sitting on the daily time frame on this one, right? So let me go to the daily time frame. So on the daily time frame on GBP USD, I want you to observe something. I intentionally put this here so that I don't forget to mention this, right? So on GBP USD, price is quite choppy. I don't know, I'm sympathizing with GBP USD traders right now because price is quite choppy on GBP USD. That's why I like Euro USD. Price is quite choppy on GBP USD right now, except you're trading on a much lower time frame, maybe 1 minute, 5 minutes, 15 minutes, and maybe 1 hour time frame. You will still be able to catch some significant move and get some significant profit. But if you're trading on a higher time frame, like the 4-hour time frames, GBP USD must have slam dunked you severally. I'm sure of that, right? If that has happened to you, if you trade on a much higher time frame and this is happening to you right now, it is not your fault, right? Let me know in the comment section down below, right? Price is quite choppy on the 4-hour time frame all the way to the weekly, monthly time frame, right? But on this daily time frame, I have this upper trend line and I'm expecting price to come into that trend line before giving us a rejection. Now that trend line may confluence with this green zone here, which is around 1.27567 area. So this is a confluence. So yes, we can see a fake out, but a rejection back to the downside, all right, which will still be price actually respecting the third touch of this trend line. So now my overall target on GBP USD is bearish for now, which is 1.23305 area. But plan B as usual, if price breaks and closes above the trend line and above this green zone is around 1.27945. If price closes above that particular price level, comes back for a retest, then I would like to catch a trade, right? This time now I am bullish, my plan B, right? So I'll be hoping the price will rally all the way up to 1.30955 area. All right, plan B. My plan A is bearish from this trend line all the way down to this price level 1.23305, and my plan B is for price to take out the trend line and this current resistance level that has been tested multiple times, right? So if you can break above it, creating a new higher high, come back for a retest, that's where I'll be looking for trading opportunities to the upside. But why do I think price will be bearish, right? That is why I left this label here. Move up are smaller, move downs are larger. Now let me delete this. Why is it not deleting? All right, so if you notice, even within the consolidations, why do I think price will most likely go bearish? Even within, number one, price has obviously created a lower low before rallying up to the upside, so I'll be expecting a new lower low created at some point. Then another thing you will observe is the candlesticks, the bullish candlesticks. Let me zoom in properly. The bullish candlesticks up are usually smaller than the bearish candlesticks down, even within this consolidation. All right, you will see that the bearish candlesticks are larger than the bullish candlesticks. That's still telling you that there is a presence of more sellers in the market. All right, then pockets of buyers here and there, but big move, big volume in sellers, right? So that's why until we break above this upper region here, I am still more bearish than bullish on GBP USD. So that is why on my thumbnail, you will see it as bearish. All right, that's why don't just rely on my thumbnail. Actually click the video and watch, because yes, my thumbnail may say bearish, but I've already given you a bullish scenario also. All right, so don't just rely on the thumbnail. The thumbnail is just for clicks. All right, clicks, that's all. All right, so but make sure you watch the video and all of that. Anyways, that is the end of today's video. Permit me to stop here. Our time is fast spent, and if you want to know how to do this analysis, remember, analysis is one thing. You can know how to do all the analysis in the world, but if you lack solid market execution, you are still not going to be profitable. You could tell the price is going to do this and that, but you cannot capitalize on that move. Then you need our mentorship program. Try to see how I trade. I explain my trading strategy strategy in detail. My entry strategy is just one for now, but I talked about different strategies so that you can personalize it and see what works for you. And I also pinpointed the only strategy I use that is profitable for me at the moment. And if there's any refinement, I always update it on the program. All right, so do yourself a favor. It's cheap, $85. If you want a one-on-one session with me, then you have to pay the $300 fee. So do that and take your trading to the next level. The year is still early. You don't want to end this here an unprofitable trader, right? You don't want that. So do yourself a favor, get either the course or a one-on-one sessions with me. The one-on-one session also comes with the course. So even if you pay the $300 for a one-on-one session with me, you are still going to get access to the course. Why is that? So that way you're going to have access to all my future updates. All right, if you made it to the end of this video and you are yet to smash that like button, do so now. Also make sure to subscribe if you haven't, and also do well to share this video, and also leave us a comment in the comment section down below, and I'm going to see you in the next video. Have a profitable trading week. Bye guys.